Evening, everyone. So it's a good time for like a top-down view. Um, there's really not much to review as far as like what we did today. The big thing is that um, we got a wedge denial here on the day. As soon as it went back below the wedge, tried a short, took half of the shorts off at around 25%. Depending on which account, it was like between 22 and 25%. And then we swung the second half, and then we got the confirmation of bearishness as it came and tested it again. I think the 65-minute here is going to give us the best picture of how this looked. So then as you came and touched it again, but then got the denial, I went ahead and added a little bit more puts. The reason I'm a bit more apt to add here, even though we haven't like broken the wedge completely, is because I like those bearish denials and because we have a really tight stop. So it's not a big loss if we end up getting stopped, which is totally possible. We're not getting the greatest confirmations across the broad market. I think the market walked away from today kind of wondering what to do. And when we look at like overall, like the macro structure of things, like we're not seeing, let's get this here. We're not seeing a big confirmation from TLT, which is kind of what we expected, right? Ended up selling off, and unlike equities, didn't really come and buy the dip. Despite the Fed's comments about being very, Powell was asked pointedly, what are you giving up on the 2% inflation, or why have you given up after, over a year of declaring that you must get inflation down to 2%? And he said, it's just a part of our process, which is the biggest, cop-out answer ever, honestly. So that was something that I thought would get a bigger reaction out of gold miners. Instead, we saw gold miners sell off, and a lot like TLT, they didn't catch much of a bounce. Granted, these are running really high, and so, this might be a point where you kind of look for a meaningful dip here. I'm actually curious if what kind of fib extensions we're looking at here. So that's like a perfect 1.618 extension. Let's try looking at another one here. I mean, that's pretty solid alignment. And let's try looking at this one here. You draw that here, actually, at the bottom there. That's like really strong confluence. So I would say that this is likely a top for gold miners. And we're going to see a tracement here. And when you're thinking macro-wise, you would think that, okay, if the Fed is basically saying the jobs numbers are more important and we're giving up on inflation, that gold would moon, right? Instead, gold's kind of pulling back, which could signal to the market something more of like a recession story. So we'll see how equities continue to react here. What's interesting to me is that IWM still looks pretty weak on the daily here, especially in the momentum structure and the TTM and the RSI. Looks very weak. We got this touch at the all-time high that was immediately denied. And like we called out on the Discord earlier today, this is a very low probability outcome. This sort of, over 2% move to the upside that then goes all the way into the red. Holding out into the red, though, closing in the red is what is low probability. And this thing just barely avoided that into the closing flat, which is still, it's not as, I think it's like a 2 to 3% probability for something for small caps to rally over 2% and then finish the day red. Finishing flat, I would imagine, is also super low probability, but I don't know what that is. It's a pretty rare outcome. It's a pretty bearish outcome. But overall, what I want to see here is I want to keep these short positions on. If we break to all-time highs, there's not a huge risk in and filling these positions out. If we get the confirmation and you break the bottom of the wedge here, that's when I'm gonna try to size up, and that's when we start talking about some of the retracement targets. A strong breakthrough here, and then we start looking for 670. Okay, that's where we kind of get this 2.618 target that we've talked about previously. So that's what I'm looking at. I think we've got a nice setup here. We've been taking it really slow today, not taking a ton of trades. The one trade would be Netflix. Netflix had a actually, before we talk about Netflix, let me just mention VIX, because many people were mentioning to me VIX, like VIX not confirming the move, VIX isn't confirming the move. That's really not a huge concern. VIX has been in this like suppressive environment, and it's been very reactive. So I'm not too shocked that when we look at like the type of pullback we had, you're not even like breaking, like distinctive previous highs. You just kind of back tested it. So to see VIX not get like a huge reaction to that and kind of sell off with the market, to me is fine. I'm not worried about that. I think if we would have broke through this, you would have seen VIX then confirm. So I wasn't too concerned with whatever VIX wanted to do. Just let's do its thing. It's fine in my opinion. So if this thing breaks like cleanly below this previous low here, below like 1440, and SPY is melting down with it, that's when I would start to say, okay, something's up. But for what is the price action today, I thought it was fine. We do though, being bears, kind of want to see this break like cleanly above like 17, and that'll be like a good confirmation. If we see SPY break out the previous high and VIX gives confirmation, I'm probably still going to close the puts and wait for price action to actually fall through, even though that would be a bit concerning. But right now, I think that's my plan. And usually when I make a plan, even if I start to doubt it, I usually just follow it. Because if you don't, you just put yourself in emotional positions, right? We talked about that a lot. So talking about the Netflix trade. I really wanted to hold this trade until after the Fed meeting, even though it hit what would technically be a stop. But I came and gave it back a review here, kind of figuring out what I want to try to do. 1230 is this major retracement. There's still a possibility it goes all the way to 1244 and then still turns over. But the concern here is that the daily momentum is already starting to turn here, and the RSI structure is already improving as well. So this might be a misread. The low might be in for Netflix, and we might have to write this one off. The relative strength that we saw here today, I thought was very unusual. It's still, in my opinion, a good setup trade. We saw the daily rolling over. We broke the major key level. We went into the position. We might have been sized a little too large in the position, and I probably should have cut over 1207. It's probably when I should have cut it. But at the point we're at now, with the losses I have on that position now, I'm going to hold it a little bit longer, just to see if we can continue to have a rollover here. If the market, I'm looking for some like broad market weakness that brings this one back to me, which would be a bit of luck. And I imagine I'm going to end up cutting this one, and it's still going to work out before the expiration date. But I don't really want it to go to zero. Even though I've like expanded the risk profile. At the end of the day, the amount of risk I'm willing to take on each trade is granted by the allocation I put into the trade in that small account. So like, because you guys might have recognized there's two different things I did between my two accounts, right? In my main account, I actually closed some of Netflix at the stop, right? And I sized down, if you remember. In the small account, I left the full position on, because in a small account, what you're willing to lose has to be what you put into the trade. And a in my normal account, my much larger account, what I'm willing to risk is what my stop is. And then if I want to leave some on, um, to kind of look for, an additional target like this to kind of give it some room to breathe because of a large macro event that I think could be a bearish catalyst, then I might leave some of the trade on, and then turn my risk into what the allocation is. Okay, so I'm managing this slightly differently, and it might sound like I'm contradicting myself, but there's a bit of nuance there, depending on the sizing of your count, because there needs to be for appropriate risk management. The other thing that's interesting here, in my opinion, is Ethereum. I'm still giving this monthly signal. Granted, small caps are as well. On the monthly, still have a buy signal. On shorter time frames, though, that could still lead to a sell-off. However, while small caps daily momentum isn't giving confirmation, Ethereum is. The only thing is, this 2-day still looks suspicious to me, and we are still in this wedge on the 65-minute. I can see that we're about to test the upside of the wedge, and I guess we could look here in the futures. If we're getting like a move on ETHA, I mean, it's a decent move. It's up 2% in the after hours. What I want to see is if we can get some follow through through the top of the wedge, though. And then I'll just go ahead buy ETHA back. I might pay a little bit more, but I'm willing to pay a little bit more for a nice clean setup like this. That's fine. Paying more for a higher probability is something you just got to do sometimes, and I'm totally okay with that. Bitcoin starting to recover as well. It's got this nice, like, rounded, like, you could call it like a really weak head and shoulders. To me, it kind of looks like a cup and handle right here, a little miniature one that's kind of setting up. You still don't have the monthly confirmation here, though, so I would definitely say it's not even the weekly. Actually, the weekly, that does not look good at all. That RSI structure does not look good either. Wonder what the 2-day looks like here. 2-day. It's just now about to turn. So maybe you can come test the previous high. Maybe you'll get some sort of short-term move here. Honestly, that kind of setup makes me think that we're likely to chop sideways for a bit. Maybe you get some big pump, and then it sells off, and then you end up setting some sort of range between the all-time high and between here. You probably want to extend your range probability down here to just below 100K. This is no relevant, and this is no longer relevant. Both of those are broken, so I would look to see Bitcoin break through one of these before I make moves from here, due to the conflicting momentum indicators in the longer time frames, which is going to control how I approach things like MSTR or in the short term as well. Coinbase is an interesting one. It looks actually pretty good, and has a similar structure to Bitcoin, but better indicators. That's probably because altcoins are kind of picking up right now in the immediate term. But again, I'm going to use Ethereum kind of as the benchmark for those, and I just want to see the wedge break. So keeping it very simple, wanting to move very slow. It's going to take probably a week for me to develop some greater confidence in the upside for a continuation. We're still, in the historically, this is when things get rough for September, like really rough in the second half. And we just had a very flimsy reaction to a major macro catalyst. So I like the way we're positioned. We'll take it slow. We'll wait for confirmations, given these like mixed macro signals that we're seeing. There's probably a good setup to short gold here for a minor pullback. The dip will be a buy. All these dips will be buys, in my opinion. All of them. And look for altcoins and Ethereum to massively outperform Bitcoin over the next 6 months, maybe even over the next year. massively outperformed Bitcoin in my opinion. So that's kind of where I stand right now. And there's some individual names that are interesting. It caught my eye that NVO is like one of the top performers in the pre-market, and we have some calls there, so that's cool to see. Yeah, it's up 3% in the overnight, so those will do well tomorrow. We have a small position there, and then there's some individual names here. I know SPY's up also in the pre-market. We got a pump. Granted, we've seen that multiple times, right? We saw that here, and then we ended up dumping, and so it's that type of volatility usually does precede downturns. So I don't really want to pontificate on it too much, and we'll just wait for the confirmations. But that's the way I see things right now. I don't believe there's any other significant positions to comment on. DH2 is just a breakout. I guess that's the only other one. We took some profits on that and then left the rest to run. And we're very heavy on cash right now. So yeah. Oh, we have NVIDIA on. I might have already mentioned this. NVIDIA is similar setup to why we set up the Netflix short, but it's giving it a bit better confirmations. It didn't get a turn today. Instead, got a bearish catalyst, breaking a major trend line. So I want to see if we can get a continuation here and continue to melt down this supportive EMA here. And then you got to kind of watch your weekly there and say, okay, we got to come test like 149 and a major pullback. I think the news was pretty significant. China banning all purchases of NVIDIA chips. I think could be significant. Granted, it was 0% of the sales they've had, and they had a Europe deal that I think was very bullish. So I think the market will take maybe a bit of time to digest that. Maybe it will end up being negative. Right now, our momentum indicators and the way these EMAs are kind of set up, it is negative. Reclaiming this EMA, or there's probably even a better indicator here on the 65-minute. This is definitely a major key level here. And then here. This is probably what you want your stop to be. We'll want our stop to be. And more dynamically watch our EMA path right here. So if we climb over this EMA, I might stop it. Which is quite a significant amount of room to breathe, but our position sizing is very reasonable. So in the small account, we're literally in a lot of, yeah. So I don't mind giving it that kind of room to breathe. And if we do get a further clarification of this trend line break, I'll come in short. So that's the way I see things right now. I feel very comfy and I'm fine. Pressing on these shorts a bit. I'm proud in the market. Saying, kind of asking where we want to go from here. And we'll see what pans out over the next few days. So let's stay patient. Not murder our win rate. Or get rugged by volatility. Those shorter day contracts, we had some of those on. We saw what those did, right? But we had really small sides on them, so it wasn't too bad. Granted, we've given some back to the market over the past few days, but it isn't anything to it isn't anything that should press on your mental. It's a tough moment in the market. So giving some back here, not a huge deal. Easier plays are coming, and money will come to you then, probably faster than you think. So I'm ready for it. Hope you are too. Have a great night. I'll see you guys tomorrow. God bless.